higher the emotion, the lower the intelligence. Raised over $50 million or so personally, and I've never once lost a single dollar of investor capital. I just want to have as much freedom I can possibly have in my life to be doing what I want to be doing with the people I want to be doing it with when I want to be doing it. I was 30 years old. How many years am I willing to commit to achieving true financial freedom? I said, okay, I'm going to give myself 10 years. My goal became 40 by 40. So 40 rental properties by age 40. And I just got hyper focused on that, man. Like all my passwords, my screensaver on my phone, 40 by 40. Hit that goal when I was 36 years old.
What's the framework that you use? How do you execute it from a family perspective?
So 3 things. One is
Dave Allred, I am so glad you're in town, man. It's always good to see you. Thanks for coming.
So excited to be here, man. Let's go.
Yeah, so you're in town for Justin Donald's Lifestyle Investor event.
Yes.
Mutual friend, great friend, been on the show a couple times. I've wanted to talk to you. I've talked to you about a bunch of this shit a lot, but you have a very similar background to me in that you spent a lot of time knocking on doors. So you had 15 years of just door knocking. You ended up building a sales team with that company of a shitload of reps under you in offices and a shitload of states that you were covering. First million by 26, moved into real estate, 1,000 doors, single family homes by 40. And now you have Axia Partners where you've got 150 million that you're managing and a bunch of investors. So you've got a wild gap from like fully responsible direct sales to leveraging other people's money in much bigger real estate projects. I want to talk about all of it. Let me start with, if you're just getting into real estate, it sounds like you did single family homes. If you're just getting into real estate, is it better to learn the single family home approach or to invest in somebody else's project?
Hey, that's a great question. So what I would say on that is it really depends on what your outcome is. I think way too many times guys, they approach investments with just, more of a short-sighted approach to it where it's more about FOMO. It's more about just what they're excited about, right? It's about a short-term need. And what's really served me well is getting crystal clear on what the outcome is. Like, what's the end goal of what you really want to accomplish, right? Whether that's financial freedom from passive income, whether that's tax mitigation, whether that's equity appreciation, capital preservation, whatever that is. And then you just reverse engineer that decision based on what's in alignment with what you really want to achieve at the end of the day. For me personally, I started out, I bought 4 townhomes, short sale, bankruptcy situation, bought them for $100,000 each. And then about 2 years later, they'd appreciated about $200,000 each. And so I then 1031 exchange, which is basically when you sell property and you just, you transfer it into another like kind property and there's no tax issue there. And so I sold those 4 townhomes, kind of parlayed that into 4 fourplexes with no cash out of pocket, right? So that equity was a down payment. 2 years later, those had appreciated by about another $250,000. So I sold each fourplex, 1031 exchange into a total of 12 new fourplexes. So I was actually able to go from 4 units to 48 units with no cash out of pocket at all. Just that equity, right? So just keep kicking that down the road, keep parlaying that. And so that was really fun, man. And so I ended up eventually owning, I think it was 28 different fourplexes all across the Western United States. And I really love the fourplex model. But then one of my personal goals is I always want to do bigger deals than yesterday. And so from there it was a 20plex and a 60plex and 237 units in Kansas. But I just continue to keep going bigger and bigger and bigger on that. And so but if I started all over again, people ask all the time, like, hey, what would you do differently? I would actually not do any single family homes or townhomes and just think bigger, go bigger. The economy of scale with commercial multifamily, so, bigger units.
Like apartment buildings?
Yeah, apartment complexes, and even fourplexes. I think that's a great place to get started. But in my opinion, a single family home or a townhome, it really doesn't make a lot of sense. I think most people just get into that space because they lack confidence or competence in how they want to approach it. Mm-hmm. But if I started all over again, I just want to think bigger and go bigger out the gate versus kind of just sticking my toes in the water.
I was talking to DK, who is a former NFL athlete, and Justin Donald last night, and they were talking about how deals get presented to, specifically they were talking about NFL athletes, and deals get presented to them, and in the absence of other deals, they're just assessing the one thing that was presented to them. And you open that by saying, functionally, people are opportunistic and they just sort of take what's in front of them and try to figure it out. And if you're strategic in your approach, you can make choices based on a different criteria of like actually what you're trying to get out of it. And I think on the front end, most people, when they get into real estate investment, are just trying to figure some shit out and make some money.
Yeah.
Right. And they're not really clear on any other criteria.
Also one thing on that is I love this thought that the higher the emotion, the lower the intelligence. And so a lot of times people make investment decisions based on emotion, what they're excited about, right?
Love that.
But ultimately, that's not the right way of doing it, man. It should be data driven. It should be, again, intentional based on what you're really trying to accomplish, reverse engineer into it. For me personally, I get probably half a dozen deals sent to me on a daily basis.
Right.
Because people know I have, I'm a sponsor and I love deals. I'm kind of a deal junkie, honestly. So I've created this 12 investment criteria, and it's 12 things that are really important to me. So Brad, you send me a deal, literally in the first minute, I can be like, okay, that's a hard pass. Or, all right, let's spend some more time looking into this further. But those 12 criteria are just lessons learned over the years. And, one last thing I'd share too is I actually keep track of a spreadsheet of every single deal I've ever invested in, how much money went into it, what the ROI was. And then I put lessons learned next to it. And so I can go back on, over 200 deals that have gone full cycle and say, okay, great job by having gotten a personal guarantee or having an attorney pay for this or doing my due diligence. Or if I lost money on it, hey, I should have done this better. I should have, had an attorney review the contract. I should have done this, And so for me, that really helps me become a more sophisticated investor. And we all have blind spots, right? So it helps me to identify what those are, and I can improve on that in the future.
So what I heard was, this is how I like to say it: fuck your feelings, have a structure, and follow your structure.
Yeah, exactly.
Yeah.
Love it.
Yeah, I think
it's a good summary right there.
Well, I really like this idea of fuck your feelings, because when people say things like, how do you feel about that? Very often, present Brad conflicts with past Brad. And when past Brad sets a goal, present Brad has different feelings about what he should be doing in a given moment, right? But future Brad is going to be happiest with past Brad's plan being followed through on.
That's interesting, man. I've actually never thought of it that way. That's, I love that. The only thing I would maybe kind of kick back on that is I think that the immediate decision, the current Brad, the current Dave today, shouldn't be a lot of emotion. But when you're thinking about that end game, like what you really want to create in your life, right? That in that situation, I think it's really important to get emotional and get excited about. Like for me, I'm a core motivator for Dave Allred is freedom. Like I just want to have as much freedom I can possibly have in my life to be doing what I want to be doing with the people I want to be doing it with when I want to be doing it, right? Just a shit ton of freedom. And for me, that really fires me up, man. It gets me passionate. I'm very passionate about it. And so that identifying that motivator and really leaning into it and thinking about in the future how, passive income and real estate and everything I'm trying to build in my career right now in my life, how that's going to serve me with more freedom later on in my life.
Yeah.
That actually gets me fired up, man. So I think emotion's great when it's looking down the road.
Yeah.
But then you reverse engineer that more based on your habits, right? And what you're actually going to be doing on a daily basis without the emotion.
Yeah, I like that. It's an important distinction. It would not be the first, second, or third time somebody has called me a robot. But I think that on the front end, when you're sort of building a vision and deciding what you want to do, what you want your life to be like, how you want to spend your time, or what kind of investment you want to be in, there's lots of room for emotion and feeling. But when it gets to execution,
there you go,
or assessment of like deal criteria, but specifically execution, emotion gets in the way of taking the steps that you should be taking. And specifically when you talk about discipline and just maintaining the path. And so people do that. And I think what I heard you say relative to deal investment is people do that all the time when a friend is excited about a deal, or a community is excited about a deal, and they're all moving with it. And that's exactly the time to stop, mute your emotions, and put your pragmatic, logical cap on and say, does it meet these criteria?
So true. I'm really proud of my track record in investing. I think it's a little less than, out of 200 and something deals I've gone full cycle, less than 10 times have I lost money. And when I look back and reflect on that, 6 of those were all because I just jumped into it because the rest of my peer group were doing it or as part of a mastermind or whatever else. And so I call it tethered due diligence. I was like, okay, well, these guys are smart. This guy's a great investor. He's doing it. And so then I skipped over my personal investment criteria And I just felt good about it because my buddies were doing it, had a little bit of FOMO probably. And I just, yeah, everybody's doing it. So I jumped into it. Right. And so I skipped some of the process and, yeah, lessons learned, man. Like those are my worst investments. Not to mention it's always food and beverage. I don't know why restaurants, man, like I got to stay in my lane with real estate because every time I kind of venture out of that, whether that's, some crypto, IPOs or, anyway, I can go down the list, but we'll
look,
another day.
In simplest terms, restaurants and bars, well, I'll just stick with restaurants. In simplest terms, restaurants are the worst investments ever. They have expiring goods. They are heavy on low-paid people, and they are reliant on reputation and trends. Like, is it a trendy restaurant or not? Those are horrible things to have in your investments, right?
Yep.
If you can eliminate expiring goods, great. If you can eliminate a shitload of people that aren't paid very well, great. And if you can eliminate this, like, is it popular or not in the moment thing, you're going to be way ahead of the game.
I agree, man. Warren Buffett says it the very best, right? He's got 2 rules for investing. Rule number 1, don't lose your money. Rule number 2, don't forget rule number 1, right? And that's why I love real estate so much. Real estate's one of those things. It's a hard asset. It creates real value. It's consistent cash flow. It's got great tax benefits. One thing I love to share all the time is, there's really 5, because I've done real estate for about 20, a little over 20 years now. And what I love about real estate, Brad, is there's really 5 wealth drivers in real estate. So one is cash flow, which is my favorite, that consistent mailbox money. And that's really the dry powder to create financial freedom. Mm-hmm. And to me, financial freedom means you have enough reoccurring passive income to where you don't have to trade your time for money, right? You've got your cost of living covered. And so cash flow, number 1. The number 2 wealth driver of real estate is appreciation. So it's appreciating with time. Number 3 is depreciation, which is the tax benefits, which are incredible. I mean, that's one of the most overlooked parts of real estate is you can mitigate so much of your tax liability through real estate and depreciation. Number 4 is principal pay down. So every single month, your tenants are basically paying you rent, and that's paying down your principal on your mortgage, and that's creating real wealth. And then number 5 is leverage, the ability to, for every $1 I put in, I'm taking, $2, $3, $4 from a lender and then just maximizing my returns through leverage. So those 5 different components have been really powerful. The more I've understood that over the last 20 years. And I got to say also, like, what I love about real estate, man, is I've raised over, $50 million or so personally, and I've never once lost a single dollar of investor capital in any real estate deal I've ever done in the last, since I got started about 20 years ago. And so, I mean, there's no way I could say that if I was doing food and beverage, a lot of other crypto, whatever else, right? And I love a lot of other investments, but real estate for me that's why I love it. It's called asymmetrical risk return. Yeah. Right. It's how do you mitigate the downside risk, but still create a really strong yield.
Yeah. No, I love that. As you know, I think I'm heavy in real estate, big fan. I want to talk about, I don't spend a lot of time talking about sort of the transition of early business stages into current day on this show in particular. But your transition is particularly interesting to me because I also grew up in aggressive sales. So you were working in door-to-door sales forever. I want to talk about that a little bit and kind of how you got into it and talk about the transition. But first and foremost, what were you selling? How'd you get into it? Why were you doing it in the first place?
Yeah, so I grew up in a very low-income home, broken home, very dysfunctional. It's a whole story there. Ran away when I was 17. My little brother ran away, moved in with me, got emancipated. And so it's just me and my brother just, not trying to thrive, but just survive, man. Mm-hmm. Just grinding every day, living off of ramen noodles and fast food and working graveyard shifts. And this house we lived in, man, it was like the most dilapidated house, the roof's falling in. Anyway, it's a whole story there too. But and so I'm going to college, and there's a recruiting booth set up to go knock doors.
Why were you going to college? So like you moved out, did you? And we're similar age, so college was sort of pushed on me or on, I think, our generation in general. Did you feel a need to go to college? Because you, like you said, you were trying to get by. You got out at 17, lived in a shithole house.
Yeah. So here's the honest answer, man. Nobody in my family had gone to college. There's no expectation there at all. And frankly, I couldn't really afford it. But I had this burning desire, man, as a kid, going through all this, this trauma, this situation, that I was going to do whatever it took to change the game and reset the standard. And I had no idea what that looked like, but I was going to be the one to just, I knew I was better than the situation that I was in. And I was going to do whatever it took to make sure that happened. Jerry Rice has one of my favorite quotes. I actually had a bunch of posters up in my bedroom. I had some Lamborghinis. I think it was a Baywatch, like Pamela Anderson poster, right? And then Cindy Crawford, for some of your older listeners, right? Little mole on the,
of course,
Cindy Crawford, man. And then, my favorite athlete was Jerry Rice, and had a poster of him. And, at the bottom it has one of his quotes, which is, I will do today what others won't so that tomorrow I can have the life that others can't. And that really just kind of stuck with me, man. I was like, okay, I'm going to do whatever it takes to break out of this. And, Ed Milet, love his take on this. And it's like, there's always the one. In every few generations, there's the one person that comes along and they reset the standard for everything. They change the game in terms of impact, success, happiness, just legacy, right? And so that's really resonated with me, man. I've kind of committed to being the one for my family to change everything for my kids, my posterity. And so, to me, college made sense. It was like, okay, I'm going to break out of this rut that I'm in right now. And so I jumped into it, and, I even left on a 2-year service mission to Peru. Went out to Peru for 2 years because, frankly, it was all my friends were, getting into knocking up their girlfriends, getting into drugs, like just a downward trajectory. And I just knew that it was going to be really hard to go and do some of these things, but I feel like it was going to serve me in the long run. And so I just jumped into it, man. Now, what's interesting, I've got 4 kids now today, and it's like, do I really want to encourage them to go to college? And that's a whole nother, and that's a big topic. But,
yeah,
frankly speaking, I feel like I learned way more going out and knocking doors and having a 15-year leadership career,
right?
Managing 121 sales teams in 41 states, thousands of salespeople. I mean, that's where the rubber meets the road, right? It's real world. You're out there cold contacting, knocking on a door, trying to get in the house, sell contract, get a same day installation. That's a lot of work. I mean, that's a hard way to make a dollar.
Well, so that's the question. Now that you've made a shitload of money, it had nothing to do with your college education. You now have 4 girls. Are you going to encourage them to go to college?
If they want to specialize in, be a lawyer and an engineer or whatever else, absolutely, right? Otherwise, I don't see there being a lot of value in it nowadays. I really don't, man. What I am, instead of that, what I am doing, Brad, is all 4 of my children, it's 3 girls, 1 boy. They all own real estate with me, so they'll invest, every year.
Oh shit, do they? How'd you structure that?
So it's a JV, joint venture, and they can bring in whatever the amount of capital that they have. And then I pay them, the cash flow on it, call it 10 to 15% cash on cash. And then the equity is appreciating in the deal as well. But it's just a simple kind of a side letter JV agreement with each one of them.
And so for clarity, your girls are young.
Yeah, 10, 13, 16, and 19.
Oh, Jesus. You have a 19-year-old?
Yeah.
Bro.
I know, man. Is that crazy?
It's always crazy to me when my friends have like adult kids. Not that a 19-year-old's really an adult.
Bro, no, it still trips me out, man. Still, I got an adult out in the world right now.
I'm going to have a bunch of offended 19-year-olds now because I said they're not adults. Yeah. I thought I was an adult when I was 18.
Yeah.
I barely feel like an adult now. Now I feel like I'm adulting pretty hard. But like, I think when I was 35, I still didn't feel like an adult.
Dude, I don't feel like I'm an adult. I don't feel like I should have an adult in the world, man. It really does. It kind of trips me up. But so every Sunday, the first Sunday of each month, we sit down, we measure their passive income, and they're all super competitive. It's like on a little scoreboard on how everybody's doing on their passive income right now. So that's been really fun. And then additionally, last year I challenged all 4 of my kids to start their own businesses. And so all 4 of them as entrepreneurs launched their own businesses. My little girl, she's 10. She started a freeze-dried candy business, and she's crushing it, knocking doors, goes out and just sells little bags of candy. My son started a vending machine business, so multiple locations around Utah, and he wants to scale that. My older girls, they started a consignment business, and a couple different malls. They scaled their 3rd location last month. And so, but I gotta say, man, as a dad, like nothing more badass than seeing your kids be entrepreneurs, learn, and just that progression that comes from being a business person. It's been really, really fun for me.
Sorry, I thought you had 4 girls. You have 3 girls and a boy?
Yeah.
How do you think about that from a family structure perspective? How do you carve out time to do that? What's the framework that you use? How do you think about encouraging them to start businesses, to invest in real estate? How do you execute it from a family perspective?
So 3 things. One is, you got to make it fun. And like, and they say I'm so passionate about passive income and real estate that I think they just kind of pick up on that to begin with. But we talk about it a lot, man. We play, like Robert Kiyosaki has a board game called Cash Flow. It's kind of like Monopoly, but it's all about, rental properties and passive income. But just talking a lot about it, kind of gamifying it when they're younger. I think that's really important. So it's not too serious. But, and then the second thing I would say is what I did was I have an amazing executive assistant. And so I actually tied her KPIs for the year, her bonus, to helping my children take all 4 of those businesses to being cash flow positive. So that was pretty cool. And the third one is, I call it the 10-80-10 principle. So I'll help out with the first 10% of helping put together a business plan, whatever else. The next 80%, kind of the heavy lifting, it's on them. Or if they want to have my assistant help them out with that. And then the last 10%, I'll jump back in and help out with just kind of, making sure everything's polished and looks really good. So the 10-80-10 principle has been a great way from a time management perspective, because I've got my own businesses, right? I've got a lot of different things going on. So I don't have time to jump in the minutia of these little businesses. And so that's been a really powerful way of doing it. And then the last one is just really recognizing a man and just giving them a lot of, I'm so proud of them, right? And so talking about that. And now they're actually like, collaborating where the vending machines are going to put, my 10-year-old's candy in the vending machine.
Yeah.
And then my girls in their consignment businesses in the mall, they're now putting the candy in there too. So there's like this cross pollination between the different businesses. So anyway, man, super proud of them. It's been fun.
Do you specifically carve out time in your family time to talk about the businesses? Does it feel more organic at this point? Is it like dinner talk or weekend talk, or do you have workshops? Like,
every Sunday we sit down for 15 minutes with each one of them. So it's a 1-hour commitment every Sunday, just kind of get a recap on what they need help with, what they're excited about. But then also I created the Allred Family Foundation. I want to teach them to give back, and that, living is giving, and the more you give, the more you live. And so we created the Family Foundation. So each one of my 4 kids are on the board of directors, and they choose whatever charity they want to support. And then 10% of whatever they earn goes into the Family Foundation, is paid out to these different charitable organizations. So it's been kind of fun.
Yeah, dude, that's awesome. I love that. Okay, so the roots of this were knocking on doors.
Yeah.
How'd you find direct sales?
We want a tangent there.
That's great, man. I think that architecting the entrepreneurship journey for your kids is phenomenally important, because without it, I think today it's much more popularized to go down the path of doing your own thing, whether it's being a solopreneur or actually an entrepreneur. It's just a much more not only accepted but known path than it was when we were growing up. But for us, we got into, were you commission-only direct sales?
Yeah, 100%.
So commission-only sales, knocking on doors, eat what you kill. Most people are afraid to do that, most parents deter their kids from doing that, because almost everybody fails at it.
Yeah.
Would you trade that experience for anything?
No, it changed my life, man. It was so formative for me. So I went out to Chicago, and I knew it was going to be hard. Like 100% knew it was going to be challenging, but went out to Chicago, which is like the exact opposite of where I grew up in Utah, right? It's like small little town. And also I'm in Chicago. And dude, 85% of our team quit. By the middle of the summertime, one of my roommates actually got shot. Somebody sniped him in the leg with a .22 caliber. He was just knocking, So at that point, then everybody quit. Besides, there were 4 of us.
Hold on. So you knocked on a door, or he knocked on a door, and somebody shot him.
Well, supposedly he like said something to kind of pissed off a homeowner, and then he was walking down the street, and so they took a small caliber rifle and shot him in the left calf. And so it's Chicago, man. It was a pretty crazy time. So, yeah. So I thought about quitting, and frankly, I thought about quitting every day. I mean, probably every hour. It was such a hard, challenging job. But I stuck through, and I finished really strong. I ended up making $31,000, which to this day was the most life-changing money I've ever made. It's more than my parents ever made. It was more than, I had like limiting belief systems, right? And I thought that was a lot. The next year I came back as a sales manager, made $157,000, which broke all these limiting beliefs, right? Like if you asked me as a kid, like if I played all my cards right and everything worked out perfectly, I'd be like, best case scenario, maybe make $100,000 in a year, right? And so it's kind of how I grew up, and the environment that I was in. And so making that was incredible, man. I came back the next year, made over $250,000, and then next year over $500,000, and then over $1 million, and it started to grow this and parlay it. And But I look back in hindsight, if I would have quit like almost everybody did, it would have completely changed the trajectory of my life. And so I'm so grateful for having the foresight to be able to stay there. And I think what really helped me, Brad, was I realized, hey, this is really challenging, but when you do hard things, that's where personal growth comes from. I knew I was going to become better. And it's all those soft skills too. It's the communication. It's the mental fortitude. It's the psychology. It's all these little soft skills that you learn along the way. They really, even today running a real estate firm, a lot of those same skill sets are very, very relevant to what I do today.
I feel the same way about vector marketing and Cutco. Like, it was the foundation of not only business in my life, but basically everything in my life, because it taught me how to effectively communicate with people. It taught me ownership of my outcomes, taught me how to schedule, taught me why relationships were of value. I mean, everything. It was a huge foundational thing for me.
Leadership. I'd say is probably the most valuable.
Well, you were in management, so you learned leadership through that process, right? And I learned some version of leadership as being like a top salesperson, but it's very different than going through the management path, right? So Justin Donald went down the management path in Vector and Cutco. And so that was a big thing for him. For me, I had to fall on my fucking face quite a bit to be any sort of mediocre manager in the first place. And now I'm navigating through that. But yeah, definitely. So you got that from direct sales. How did that move into real estate? At what point? Because I think that these moments are really important, not only for sort of the W-2 community, the employee community that's trying to move to the next thing, but I think it's also really important for business owners that are looking at the next thing, whether it's an investment or it's the next venture. How did you look at the jump into diving into real estate? Yeah,
that's a great question. So I think this might be very valuable for your listeners. For me personally, like, I never enjoyed knocking doors. It was always a means to an end. And so for me, it was, and this is really what separated me from most of my peer group, was I was aggressively taking that active income that I was making from commissions and deploying that into passive income real estate. And I started doing that early on. I went to my CPA after that second year, made $157,000. And I went to my CPA. I'm like, hey, what are all your wealthy clients doing to help mitigate taxes? Right. And, cause I felt like I was wealthy, right? And he's like, well, they're either buying businesses or buying real estate. I was like, okay, real estate sounds cool. I know nothing about it, but I'm going to become a student of the game of real estate. And so I just started soaking it all in, man, getting proximity to guys that were doing it and trying to learn as much as I can, read all the books on it. And,
what'd you read?
Rich Dad, Poor Dad, Robert Kiyosaki is one of the best ones. The Real Estate Bible was good. There was Joe Fairless, the best ever apartment syndication book was big, because eventually I started to raise money from other people and help bring them in, my friends, my family, whatnot, into it. But kind of slowing down the story a little bit though. So he's like, real estate. So like, okay, cool. And so I just started aggressively putting money into that. And most guys are buying new trucks, Wayrunners, new boats, new rims, like depreciating assets. And so I started getting this cash flow going. And I fell in love with this journey of just creating as much possible cash flow as possible. And I'll never forget this. I sat down on a Sunday one time and I was like, okay, I've been talking about passive income for a long time, financial freedom, but I want to actually commit to creating true financial freedom. So I spent 4 hours on a spreadsheet and I came up with what I call the financial freedom equation. And it's really simple. I'll share. So you basically just quantify what is your total cost of living. So all in, car payments, gas, insurance, housing, whatever else, right? So let's, as an example, say it's $200,000. The next line item on the spreadsheet is, well, how much passive income do I have right now? Let's say you have $50,000 coming in from a townhome or some dividend stocks or whatever else. The next line item is, what's the gap? So in that situation, it's $150,000. And the next line item is, well, how many years am I willing to commit to achieving true financial freedom? And for me, I was 30 years old. I said, okay, I'm going to give myself 10 years. And so then as a real estate guy, I'm like, okay, well, how many rental properties do I need to have to be able to create that $200,000 of passive income? And the answer was 40 rental properties. And so my goal became 40 by 40. So 40 rental properties by age 40. And I just got hyper focused on that, man. Like all my passwords, it was all 40 by 40. My screensaver on my phone, 40 by 40. And I just got super focused on that, man. Every Sunday I sit down and measure that. And there's real power in having something in writing like that. They say you're 42% more likely to hit a goal if it's in writing. But being able to go back and see those incremental improvements and the accountability was really powerful for me. Hit that goal when I was 36 years old.
Let me highlight that. So you said a couple of things that I think are dope, which are you made your passwords, things related to your goals. You had it on your screensaver. You put it around. And I think that one of the easiest ways to fall out of focus and lose track of where you're at is just by not seeing it. And one of the easiest things you can do to stay in focus is make sure you see your fucking goals everywhere. And it seems cliche and it seems silly, but like any little area of your life where you can draw your goal back into focus, even if it's for a second, will snap you back into grid in some capacity.
100%.
You made it this far, which probably means that you're an entrepreneur, which probably means that you're accepting credit cards and maybe ACH payments. Beyond the fact that we can do a rate review to save you money, beyond the fact that we give you dedicated account reps, world-class customer service, world-class technology, and can actually optimize the way you accept payments online, our average client saves a year by working with us. If you want to find out how and get a free rate review from us, check us out at epd.com/am.
I actually created something called lifestyle design, and it's my own personal template with 10 different areas in my life that I want to be great at and live with no regret, purpose, and impact. So, it's my finances, my health, my family, businesses, experiences, spiritual relationships. And so these 10 different areas, all in writing, very, very clearly defined on what, to Dave Allred, what a life well lived with no regrets looks like. And that's been great, man. It's kind of like a North Star for me in writing. And it's an evolving document where I'm always going back and changing it and adjusting it as I personally grow. But that's been awesome, man. I even made a youth version. It's available on my website as well as a free download, but all my kids went through that this last year. And so they have in writing 10 areas of their life, how they want to make a difference and how they want to live their life. So pretty, I think it's pretty badass, man, to go through that level of detail, but in writing where you can go back and reference that.
I love that. Also, I know that I hear that and some people hear that and they're like, fuck, I've got so many things going on that seems like a pain in the ass. Like, okay, I'll sit down and do the exercise. And some people sit down and do the exercise, then never fucking look at it again.
Yeah.
And so part of that is that life is busy and there are a million things to do. And if that feels like work, how do you fit it in? And I can tell that you're excited and passionate about it. And I know that I've done tons of things like that. And one of the reasons I just highlighted the importance of adding those little goals all over your life is because it feels effortless. Once you put those things in place, you just see the goals all over the place. So my question is, relative to being hyper-focused on a goal and saying, hey, I'm driving towards 40 by 40 or whatever your new goals are now, because now you're an old man. Jokes. But older than 40. You're hyper-focused on a goal. Where do you find time to play and where does play fit into the picture?
What's funny is I was just going to go into that. I think that adventure is really important to me, right? So I mentioned freedom is like a core motivator for me, but I think it's also really important that you get a lot of adventure in there, right? So it's more, that's what life's all about. It's about the experience. If you ask me, like on my deathbed, when I look back at my life, because I've thought a lot about, what's important, like the purpose and North Star, it really comes down to three things that are most important to Dave Allred. So it's relationships, experiences, and memories. I lost my mom about 5 years ago. Completely unexpectedly. It was a really hard, it was a whole other story, and then my dad has Parkinson's disease about 10 years in, which is chronic and degenerative. And, it's been really hard. And so it makes me think a lot about, okay, what do I want my life legacy to be? And how can I create more impact right now and make sure I'm living in alignment with what's truly important to me personally. And so, that's really kind of what's maybe focus so much on this specific topic, but adventure, man. I'm a professional adventurer at heart. I've been to 65 plus countries. Mount Everest expedition, running with the bulls. I'm just a long list of things. I think it's really important that we're always sprinkling in adventure along the way. That's what really, it not only keeps you feeling alive, but I think that it's also, this is my personal experience. It's about calculated risk. Business, aggressive growth business is about calculated risk. So if I'm, base jumping or skydiving or, summiting a mountain or running with the bulls, 2 years ago, like that is very much calculated risk. And for me, like that makes me feel alive, man. And it makes me feel like it makes me look at risk differently and be okay with it and actually embrace it as long as it's calculated. And so that's kind of how I approach that. But yeah, man, I think it's important. One of the things in that lifestyle design, the number 10 tab is it's experiences. And so I keep a running bucket list of all the cool shit I want to do. And my goal is to make sure I get at least 2 big things off of that bucket list every single year.
Okay, got it. So I struggle with the notion of knowing that when I have a big goal, all time that I'm not spending towards that big goal could be pulling me further away from the big goal, right? I have this thing in my head of, is this getting me closer to or further away from the goal? So if you have a large goal that you're working towards, 40 properties by 40, and you carve out a week or a weekend to do some adventure, do you feel like that ties into the goal, or do you feel like it's just part of living a big life? Do you feel like it takes away from the goal?
I think that it kind of depends on the phase you're at in life. Like for me, when I was, in my earlier, 20s and 30s, it was just grinding, doing whatever it takes. I got to break out of this and I've got to go and pay the price. And, I always say that the price of greatness is imbalance, right? You've got to be willing to have imbalance. But there's also seasonality to that, where sometimes you got to go launch a new business, start a new sales team, a new venture, whatever that looks like, a new family, relationship, whatever. And so you're going to be kind of all in on that one thing. But then you want to make sure that you then zoom out a little bit and then you reinvest more into, your personal health or spiritual or your finances, right? So it's more of a macro perspective, but I think there's definitely these different periods and seasons where you should be imbalanced. You should be able to go all in on it because that's what it takes to actually be great at what you want to do. And so that's the first part of that answer. But I really do think that it's more of a holistic, truly winning is more of a holistic perspective, a 360 perspective. Like we all know people that are great health, great fitness, but then like their finances are shit, right?
Yeah.
Or they are very enlightened and spiritual, but they have no business experience whatsoever, right? So really it's about all 10 of those different categories coming together. And to me, that's where you really get fulfillment and you really feel like you're living your best version of yourself, right? So that's kind of my quick answer on that one. I would say that as you progress, though, what's worked for me is what I've learned a lot more recently is, well, there's 2 things actually. Sorry. So I hit that 40 by 40 goal when I was 36, and then instead of being comfortable and be like, okay, that's cool, now I can retire. It was all right. Let's reset that goal to 1,000 doors by age 40. So I'm like, okay, I figured out a few things. I've got some knowledge here. I've got some confidence. So then I hit that goal when I was 40, and I was like, okay, well, what's next? And it was, well, let's go launch a real estate firm where we can go create value at scale for thousands of investors and really make a dent in the universe. And so, like for me, it's always about progression. It's always about that next level. It's always about how do I find the best version of Dave Allred? And for me, I get a lot of energy from creation and from pushing myself and really just exploring what my potential really is and how much impact I can make. That's maybe that's very unique to me, but that's where I get my energy from. Like I feel the most alive when I'm really building, and frankly, when I'm a little uncomfortable. Like one of my goals in my life is always to actually be a little bit uncomfortable. I feel like, you're either growing or you're dying. It's like in nature, everything's either going up or down, right? There's no such thing as coasting or stagnation. In fact, that really scares me. Like the whole idea of retiring to me sounds like the worst thing. Like I don't want anything to do with that. But what I am doing, Brad, now is I'm trying to create more balance at this point in my life where I can actually prioritize my family, my kids, the things, adventure, these bucket list items. And what's worked for me a lot more recently has really been focusing on buying back my time. So I've taken about 25 different things in my life and delegated those and outsourced those. And that's been awesome, man, because now I can really prioritize just 2 things, my family and Axia Partners, my real estate firm. Anything and everything that I can delegate, I've been pushing that out as aggressively as I possibly can. And I got to give credit to Dan Martell, his book, Buy Back the Time. I know you're good friends with him as well. And, we were hanging out in Cabo last year, and then we did the bald face. Actually, yeah, all three of us were up there.
Yeah.
Hitting bald face
every year.
A few months ago. That was amazing.
I know. I ran into you in the Salt Lake airport randomly.
That's right.
And you were like, oh, what are you doing here? And I was like, the fuck are you doing here? And you're like, oh, I'm going on this ski trip and blah, blah, blah. And I was like, yeah, Martell's? And you were like, yeah. You're like, wait, are you going too? And I was like, yeah. Like,
you're like, yeah, I've been going every year for the last decade.
Yeah, so. Yeah. No, great. So Dan Martell wrote a book called Buy Back Your Time. Great book. Dan's, a super impressive character. But so when you talk about buying back your time, this is a driver for you to be able to focus on other areas of your life that are important to you. And when we look at sort of alignment of goals, you mentioned adventure being one, you mentioned family being another. How much of an impact did Dan's book have on this process? And what are the things that you wanted to get off your plate immediately?
First and foremost was hiring an amazing executive assistant. I had one, but basically upgraded, and it's moved the needle a ton. I outsourced our yard maintenance, hired an estate manager, handyman, house cleaners, in-home kids sports coaching. So instead of having to drive, my wife drive them somewhere else, they come to us. Nutritionalists, in-home phlebotomist to do like blood work draws every quarter for us. I'm kind of a closet biohacker.
Yeah.
I've been into that space for a couple of years now. I actually love it. A chef, or at least pre-made meals that are delivered to your home for you. Concierge doctor service. That's been really awesome, where you literally never have to go to a doctor's office. They come to you, and if you need a refill or a prescription or whatever else, it's just done for you. A text message. In-home fitness training, a mobile DEXA scan comes to our home once a quarter. An in-home gym equipment, in-home massages. That's been awesome. A travel coordinator. So instead of having to try to figure out your own vacations, they help you out with that as well. Mobile car detailing, all that kind of stuff. But AI, then like a premium subscription to AI, that's been a big, it saves a lot of time as well for me. And again, the executive assistant's been amazing. So when I share that list, a lot of people will be like, that sounds very expensive, right? And I guess it is, but Dan Martell talks about this concept of your average earning per hour, right? So whatever that is, let's say you make $100 an hour, and you divide that by 4, so $25. Anything and everything that you can delegate for $25 an hour, you should do that. Like 100%, just delegate it. And what that does, it allows you to focus on your highest and best use of your time, which is usually where your highest earning potential is, right? And so even though it's going to cost you to delegate all this stuff, you should be making even more, because you now are focusing on where you actually have your best earning opportunity.
Yeah, I love that. And so I'll expand on that. First and foremost, you did quick math there. Quick math for anybody to figure this out, and not exact, but quick math is whatever you make per year, divide it by 2,000 hours, and you get to your hourly rate. That's easy math, for not exact, but easy math. From there, the rationale that Dan gives is anything that is 25% of your hourly rate that you're worth, you should be having other people do for you. That's hard anyway for some people to wrap their head around, and their lifestyle isn't always set up to do that. I try to live that way in general. But the other thing that you said is, you rattled off this list of just a ton of things. The other really important realization is a lot of those things, there are varying ways to do it. So you talk about like a nutritionist. One path there is to hire a nutritionist. Another is just to invest a small amount of time to invest in a person that creates a nutrition plan for you, right? And then there's a difference between a private chef or prepaid meal services. And prepaid meal services can be incredibly affordable, right? But some of this is just investing the time on the front end, or thinking through it on the front end to decide what you should take off your plate, what you shouldn't. Is there a less expensive way or not? But if you never focused on it in the first place because you have this delusion that it's out of reach, you certainly aren't going to get there.
100% agree with that, man. And that's why it's taken me 2 years to get to this point. Is it's more just like the mindset of asking yourself that question.
Yep.
Can I delegate this? Should I delegate it? And I would add one asterisk, kind of a filter that I use is this question of, does it give me energy? And if something gives me energy and I actually enjoy doing it, then maybe I don't want to delegate that, even if I'm not making more money from doing that, right? But I actually enjoy it. I get energy, I get, purpose from it.
Yep.
And I'm going to hold on to that one.
Yeah, I love that. The other one that I like to hold on to is, am I going to learn from it in a way that will serve me later? And there are lots of things that I know long-term I don't want to be doing, or even maybe short-term I don't want to be doing, but I need to have the fundamental understanding of how to do it so that I have a good enough grip to apply it in other areas of my life later, or delegate it effectively, or whatever. That pertains specifically in business. Like if you try to delegate out all things in business and you have no grip on sales, marketing, operations, technology, taxation's another one. If you don't have any grip on those things, you don't know who to trust and who not to trust. So there's some things that like doing the exercise for a period of time gives you competence, right? At least enough to be able to play the game.
10,000 hours concept, right?
Well, that's a whole other fucking level, right? If you want to be the best at it.
Yeah, mastery.
Yeah, I love those things in general for everybody. Whether you're like a W-2 employee, you're a solopreneur, you're a wantrepreneur, you're an entrepreneur, you have a giant company. Those are the great framework for everybody. Let's talk about the leveraged side of real estate. So you spend all this time learning single-family homes and multifamily, right? In small multifamily, fourplexes is what you started with, or you mentioned in the beginning. You also mentioned that your general approach is to always learn, scale up, learn something new, do something bigger. Mm-hmm. The contrary approach, which I've seen people do incredibly well with, is keep doing the same boring shit over and over and over and over and over and just amass wealth that way. And you're shaking your head when I said that because you're like, I don't want to do that shit.
Life's too short for that, man.
Well, there you go. So that's your answer is life's too short. I want to learn and grow and do something different. So you have the variety itch there. Why did you move into leveraged real estate? And what I mean by that is, why did you decide that you wanted to raise a fund and use other people's money to invest in real estate and keep less for yourself versus doing it independently and owning it all yourself?
That's a great question. Nobody's ever asked me that before. A few reasons. Number one is one of my personal, my mission statement is I want to create direct value for at least 10 million people and help at least 1,000 other people become financially free through real estate. It's just a purpose statement. I actually made that at Tony Robbins' Date with Destiny, 6 days, going really deep on what's important to you. And that was part of my mission statement. So I just realized I can create impact and value for a lot of people at scale with a fund structure versus, my own personal deals or even syndications. Syndications is where you basically raise capital for just one deal and usually bringing in, 10 to 20 people into the deal. Whereas on a fund, I can bring in hundreds and hundreds of investors in every single fund offering. And so that was a big part of it, just the scale. Number two is, just honestly speaking, I have limited resource, my own personal capital. And so if I'm always going to go buy more commercial real estate, you run out of personal capital, right? Yeah. So if I can use OPM, other people's money, and do it at a much larger scale and create value for them, like that's where it really gets fun because you can go and again, one of my mantras is always do bigger deals than yesterday. So I always want to be doing bigger deals. And it's not just because of the profitability, but it's also I'm going to be around other guys that are doing big deals. I'm going to have more personal development. I'm going to have more proximity to these guys that are actually really making a difference, moving the needle. And frankly, it's where you get a little uncomfortable, right? Like a lot of times it's like taking a big bite off of something and like, I don't even know how I'm going to chew on it. I'm going to take the bite first, then I'm going to chew on it. Example of that is my partners and I, we brought a Topgolf into Utah County. And I'll be honest, man, like that was like a 5-year process. I always joke this gray hair coming in, it's all from this Topgolf deal, but it was actually incredible, man. And it's like it's in our backyard and it's a legacy, play. But it was a big project. And I actually didn't really know exactly how we were going to do it. It felt right. It felt like it was in alignment. And I knew I was going to get a lot of personal development and growth from that process. And so, but now I feel so much more confident to be able to go and do a project of that scale. And so that's a big part of it. Going back to your question, like, why do a fund versus this? The other part of it is it's really nice to be able to go into a competitive bid on an asset and be like, hey, we're actually fully capitalized. We have proof of funds. We're ready to close quickly. We closed on a few multifamily deals recently where we came in. We were well below the top offers. Yep. But because we were well capitalized and could close quickly, we were able to secure the deal. So, which is great for our investors. Another reason for that is the fact that a lot of
let me double click on that for anybody that doesn't do real estate all day.
Yeah.
Which is the parallel here is like if you go to buy a single family home, you're trying to buy your home. and 5 other people are trying to buy it also, it's not necessarily the person that has the highest offer on that home. It's all these other things. And the big one is if you can pay cash and you can close really quickly, that's a more solid offer than the person that offers more, but is going to have to go get financing. The financing may fall through, and then the person selling it doesn't necessarily get to sell it. So you go to a big multifamily deal, and your fund, when you say fully capitalized, you just have a shitload of money sitting there, and you're just ready to buy it. And so you have much better leverage in those situations for negotiation.
Nailed it. Exactly right. And then looking forward, so we're actually launching a new fund. It's called the Axia Distressed Opportunity Fund this week. And so this fund is going after distressed, like financially distressed multifamily, as well as destination RV parks. And so when it's a distressed multifamily deal, meaning that like the bank's taking it over, it's a short sale, the current owner's underwater if they're financing, we can come in, and those are usually a really quick closing period. We don't have 90 to 120 days. You got to close faster on that one. So being fully capitalized allows us to be even more opportunistic and more aggressive in those acquisitions.
I love that. Well, look, I know that you've got to get to the airport. So I appreciate you carving out time, man. We'll talk more, hopefully in the future on the show. We certainly will hang out more in the future. In the meantime, where do you want to point people?
Pretty active on social media. So just Dave Allred, any of the socials. I'm probably most active on Instagram. Our website is Axia Partners, AXIA Partners. But yeah, man, I mean, just anywhere on the socials.
Love it. Dave, until next time, man.
Thanks, Brad. Appreciate you.
Thanks for checking out this Beyond a Million episode. It occurred to me just now that I never tell people to leave comments, and that's probably really stupid. I should tell you to leave a comment. So if you have any questions, or you liked the show, or you hated the show, it would be awesome if you would leave a comment. It makes a big difference in helping other people find it. Leave a comment below.